Today, credit growth and retail both slow in December. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and private news with a distinctively Australian flavour. So it's the last day of the month, of course, so we get the data from both the RBA and APRA relating to the credit. And we also got today the ABS data relating to retail. So we're going to go through the data, and it's just interesting to note the subtle slowing on all dimensions. No surprise, I guess, given the higher interest rates. So we'll start with the financial aggregates. This is from the Reserve Bank. And they said that in the year ending to December 2022, total credit grew by 8.3% compared to 7.2% a year ago. Housing grew 6.5% compared to a higher 7.4% last year. Personal credit dropped slightly, but last year had dropped even more. And business credit was up to 12.9% compared to 8.4% over the previous year. And if we look at the most recent month, total credit grew by 0.3% compared to 0.5% in November. Housing credit dropped to 0.3% growth compared to 0.4% the previous month. Personal credit was down minus 0.5% compared with a small rise of 0.1% last month. And business credit 0.3% compared to 0.7% last month. Broad money was significantly down 6.6% compared with 9.5% a year ago, but the monthly growth was 0.7%, the same as the previous month. So if we start in detail, we'll look at the monthly credit aggregates. Housing overall grew 0.34%, and you can see there that it continues to decline in terms of growth, still positive, but less so than previously. Owner occupation rose 0.38%, again down, and investment lending 0.26%, again a slight fall. Personal credit was down, that's after the Christmas splurge, one would assume, and business was also significantly down as well, compared with the previous month, but up 0.31%. We then look at the overall aggregates. Overall credit rose 0.31% in the month, and broad money was up 0.74% in the month. We look at the annualised trends. We can see that housing is now back to 6.46% annualised, so off its highs, but still quite strong, relatively speaking. Owner occupation lending was at 6.92%, same trend, going down a little, but still quite strong. Property investment lending down to 5.53%, and again a little weaker, but still relatively strong compared with, for example, the period from 2017 onwards. Personal credit pretty much flat, and business credit easing back to 12.87%. And the annualised credit aggregate showed that all credit grew 8.3% over the last year, and broad money was at 6.59%, still growing, but significantly lower than at the peak back in 2020, when, of course, the COVID stimulus was in force. And the 3-month aggregate shows that housing was up 1.17%, still easing back relative to previous quarters. Owner occupation was 1.35% higher, still down from where it was last year. And investment at 0.82%, still down compared with last year. Personal credit was down 0.28% over the last quarter. And business was 1.77%, which is considerably down from where we were in the middle of last year. And looking at broad money, all credit was down to 1.31% over the quarter, and broad money was up to 2.15%. Now let's look at the APRA statistics. This, of course, relates to the authorised deposit-taking institutions, in other words, the banks. And the first thing to note is that the change in owner-occupied lending in the month was up 0.54% and is continuing that sort of level that we've seen in recent months. Investment lending at 0.38% was a little stronger than we were at the end of last year, but still somewhat down from the previous quarters. And total credit was 0.49%. Now, the total value of loans outstanding was more than $2.06 trillion. That's another new record. We seem to hit records every month at the moment. And looking in more detail, we can see that both owner occupation and investment lending rose, although relatively speaking, investment lending was growing slightly slower. So we're now down to 32.81% of all loans outstanding being investment loans. And of course, the loan stock includes refinancing from one organisation to another as well. And we can look at the selected portfolio movements from November to December. Commonwealth Bank, Australia and New Zealand Bank and Macquarie were the top three on both owner-occupied and investment lending. And it's worth noting that pretty much all of those lenders were also lending for investment purposes. And looking at the other side of the equation, ING, MyState, both lost a little volume. Bendigo Bank lost some investment lending in terms of volumes, whereas Bank of Queensland grew owner-occupation loans, but slid slightly on the investment side of the house. So once again, it shows that there are rather different trends amongst different banks with regard to their competitive position in the marketplace at the moment. Now we're going to look at the ABS statistics for retail, which came out today and showed the first fall in nearly a year. And the ABS said that Australian retail turnover fell 3.9% in December 2022, according to the ABS figures released today. That follows a 1.7% rise in November 2022. The ABS said this is the first monthly fall in retail turnover for 2022, following 11 consecutive monthly rises, and sort of proves what we thought, which was that retail was strong through the November sales, but was a little weaker over Christmas. Retail turnover remains elevated, they said, at its sixth highest level in the series, and was up 7.5% through the year. Remember that 7.5% number. Bear in mind that inflation is pretty much in the same place. The large fall in December suggests that retail spending is slowing, they said, due to high cost of living pressures. Retail businesses reported that many consumers had responded to these pressures by doing more Christmas shopping in November to take advantage of heavily discounted promotional activity as part of the Black Friday sales event. Seasonal spending patterns continue to change and evolve around Black Friday and the holiday period. While there was a strong rise in original terms for December, as is expected in the lead up to Christmas, this year's rise in original terms was smaller than those typically seen in the past December months. This has led to the large seasonally adjusted fall, the ABS said. Turnover fell in industries previously boosted by the November Black Friday sales. Department stores had the largest fall, down 14.3%, followed by clothing, footwear and personal accessories retailing, down 13.1%, household goods retailing, down 7.8%, and other retailing, down 4.6%. Food retailing was the only industry to record a rise in December, just up 0.3%, while cafes, restaurants and takeaway food services were relatively unchanged from November. Retail turnover fell across all states and territories, with the majority down by more than 3%. The latest consumer price index shows that prices continue to rise strongly in the December quarter. To see the effect of consumer prices on recent turnover growth, it's going to be important to look at quarterly retail sales volumes, which the ABS will release next week. But the takeout from all of this is that we see considerable slowing across the economy, from lower levels of credit growth across mortgages and more broadly across business as well, and also retail spending easing back. So some perhaps early leading indicators of recessionary forces beginning to build. Of course, the question will be whether recessions really will come or whether it will just be a bit of a slowdown. That, of course, to an extent will be determined by the RBA and its rate decision next Tuesday, which is likely to be at 0.25% minimum because of the strong inflation numbers that we saw just last week. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.